You know what's more embarrassing than getting curved by someone who's clearly out of your league? Getting curved by a credit card company offering a 29% APR piece of plastic. But that's exactly where you're at with a 580 credit score. You're so financially toxic that even predatory lenders are like, nah, we're good. The crazy part is, while you're getting denied for a Target credit card, there are people with 740 plus scores getting offered $50,000 credit lines with 0% interest for 18 months. And the difference between you and them isn't their salary or their trust fund. It's 5 specific moves that can transform your credit from dumpster fire to pristine in literally 90 days. Not years, not decades, 90 days. What's up everyone, Ryan here from Ryan Invest, and today we're about to expose the credit score game that's been rigged against you since day one. See, the credit bureaus want you to think this is some complex system that takes years to improve because confusion equals profit in their world. But I'm about to show you exactly how to go from a 580, where even your own mother wouldn't co-sign for you, to a 740, where banks literally fight over who gets to lend you money. If you're sick of paying deposits for everything like you're on financial probation, subscribe right now and let's fix this mess. And slam that like button because it helps more people find this information that the credit bureaus definitely don't want you to know. Let's start with some truth that's going to hurt worse than stepping on a Lego at 3 a.m. According to FICO's latest data, 11% of Americans have a credit score between 550 and 599. That's roughly 28 million adults walking around getting financially violated by every lender they meet. The average person with a 580 score pays $95,000 more in interest over their lifetime compared to someone with a 750 score, according to research from WalletHub. $95,000. That's a Tesla Model S. That's 2 years of median household income. That's your kid's college education evaporated because you didn't understand how 3 digits control your entire financial life. But here's what's actually criminal. The same banks charging you 28% interest on a credit card are borrowing money from the Federal Reserve at 5.5%. They're making 22.5% profit just because your score sucks. Chase made $15.8 billion in credit card revenue last year. Citibank made $12.4 billion. They're literally building skyscrapers with the money they're extracting from people with bad credit. And the best part, they spend millions on marketing to convince you that having their credit card makes you successful, while simultaneously hoping you carry a balance forever. Now, before I reveal the 5 tactical moves that will revolutionize your credit, let's demystify what's actually happening behind the scenes. Your credit score isn't some judgment from the financial gods about your moral character. It's literally just a statistical model predicting the likelihood you'll go 90 days late on a payment in the next 24 months. That's it. The FICO algorithm was created in 1989, before the internet, before smartphones, before online banking. We're using Reagan-era math to determine who gets approved for credit in 2024. Make that make sense. The 580 credit score zone is what I call financial no man's land. You're not quite at rock bottom. That's reserved for the sub 500 crew who probably have judgments and repos. But you're nowhere near respectability either. With a 580, you're looking at interest rates that should be illegal. Personal loans at 35% APR. Credit cards at 29.99% if you can even get approved. Auto loans at 18% from those no credit check dealers who are basically legal loan sharks. Even your cell phone company wants a $500 deposit because they think you're going to run off with an iPhone and disappear into the wilderness. Meanwhile, someone with a 740 score lives in a completely different financial universe. They're getting credit cards with $30,000 limits at 15% APR. Their car loan is at 4%. Their mortgage rate is a full 2% lower, which saves them $300,000 over the life of the loan on a typical house. They don't pay deposits. They get approved for apartments without references. They can even negotiate better rates on insurance. It's like having a financial cheat code, except it's not cheating, it's just understanding the rules. So let's dive into the 5 things you're going to do over the next 90 days. And I'm warning you upfront, some of these are going to require you to be strategic in ways that might feel uncomfortable. But staying at 580 should feel a lot more uncomfortable than anything I'm about to suggest. Strategy number 1, the authorized user arbitrage. This is where you leverage other people's good credit to boost your own, and it's so effective it should probably be illegal. Here's the deal. When someone adds you as an authorized user to their credit card, that entire account history gets copied to your credit report. We're talking potentially decades of perfect payment history appearing on your report overnight. But here's what most people don't understand. You want to be added to old, high-limit cards with low balances. Age of accounts is 15% of your score, and utilization is 30%. One authorized user account can impact 45% of your score calculation. The math here is beautiful. Let's say your mom has a credit card she got in 2005 with a $15,000 limit, and she keeps about $500 on it. That's 3% utilization and a 19-year credit history. When she adds you, boom, you now have a 19-year-old account with perfect payment history and stellar utilization on your report. According to a study by Credit.com, authorized user accounts can increase scores by 10 to 100 points depending on the account's characteristics and your starting point. But here's the advanced play nobody talks about. You can be an authorized user on multiple accounts. There's no rule saying you can only be on one. If you can get added to 3 to 4 solid accounts, you're essentially importing 50 plus years of combined credit history onto your report. The algorithm doesn't differentiate between your credit history and authorized user history. It's all just data points that calculate into your score. The conversation to have with potential authorized users goes like this. I'm working on improving my financial situation and my credit score is holding me back from better interest rates. Adding me as an authorized user would really help, and you don't even need to give me the card. I just need to be on the account for credit reporting purposes. I'd really appreciate your help with this. And most people don't even know this is possible, so you might need to educate them that it won't affect their credit unless you somehow got the card and used it. Strategy number 2, the rapid-fire dispute assault. This is where we go to war with the credit bureaus using their own rules against them. Under the Fair Credit Reporting Act, credit bureaus have 30 days to verify any information you dispute. If they can't verify it, they legally have to remove it. Here's the thing, credit bureaus process millions of disputes and they're not exactly hiring Harvard graduates to investigate each one. They use automated systems and overworked employees who have about 2 minutes to handle each dispute. You're going to dispute everything negative on your report, but strategically. Don't just click "this isn't mine" on everything. That's amateur hour. For collections, dispute the amount. For late payments, dispute the date. For charge-offs, dispute the last payment date. When you dispute specific details rather than the entire trade line, it forces actual investigation rather than automated verification. And here's the beautiful part, that buyers and collection agencies are notoriously bad at keeping proper documentation. If that debt has been sold 3 times, good luck to them proving the exact amount or date. The online dispute systems are convenient but less effective. Write physical letters, send them certified mail with return receipt requested. This creates a paper trail and often gets routed to a different department that does more thorough reviews. Include a copy of your driver's license and a recent utility bill to verify your identity. Make them work for it. And here's a ninja move. Dispute with all 3 bureaus simultaneously, but use slightly different reasons for each one. One bureau might verify while another delete. And once one deletes, you can use that as ammunition with the others. According to a Consumer Financial Protection Bureau study, 65% of consumers who disputed items on their credit reports had information modified or deleted. Those are amazing odds. If you have 5 negative items and 3 get removed, that could easily be a 100-point swing in your score. Strategy number 3, the utilization reset hack. This is the fastest way to juice your score because utilization has no memory. It recalculates every month based on current balances. Most people think they need to pay off all their debt to improve utilization, but that's thinking like a poor person. Rich people use leverage and strategy. Here's what you're really going to do. First, figure out exactly when each of your credit cards reports to the bureaus. This isn't your due date. It's usually your statement closing date, but not always. Call each card company and ask, what date do you report to the bureaus? Write this down for every card. Now, 3 days before each reporting date, pay the balance down to 1% of the limit, not 0. Having a small balance actually scores better than 0 balance according to FICO. After it reports, you can use the card normally again if needed. But here's where it gets interesting. Apply for a credit line increase on every card you have. Most banks will do this with a soft pull if you've been a customer for 6 months. Even with bad credit, if you've been paying on time, they'll often bump you up 20 to 30%. Every limit increase drops your utilization ratio. If you have $2,000 in debt on $3,000 in limits, 67% utilization. Terrible. And you get those limits increased to $5,000, suddenly you're at 40% utilization without paying a dime of debt. The ultimate utilization hack is the balance transfer shuffle. If you can get approved for a balance transfer card, and some actually approve people with scores as low as 600, you can move debt from a high utilization card to a new card with a higher limit. This immediately improves your per card utilization and often comes with 0% interest for 12 to 18 months, giving you breathing room to pay it down. Strategy number 4, the new account injection method. This sounds counterintuitive because new accounts lower your average account age, but the scoring algorithm weights payment history and account mix more heavily than age for people with damaged credit. You're going to open specific types of accounts that are easy to get and boost your score fast. First, get a secured credit card from a bank that graduates to unsecured. Discover and Capital One are the best for this. Put down $200 to $500, use it for one small subscription, set it on autopay, and forget it exists. Within 6 to 8 months, they'll graduate it to unsecured and often increase the limit. That deposit becomes available credit. Next, get a credit builder loan from Self or a local credit union. These are designed for people with bad credit. You borrow $500, but they hold it in a savings account. You pay $25 to $50 per month, and after 12 to 24 months, you get your money back. It's forced saving that builds payment history. But here's the key. Get multiple credit builder loans from different lenders.
Three $500 loans means 3 accounts all reporting perfect payment history every month.
In 1.05 speed, next get a credit builder loan from Self or a local credit union. These are designed for people with bad credit. You borrow $500, but they hold it in a savings account. You pay $25 to $50 per month, and after 12 to 24 months, you get your money back. It's forced savings that builds payment history. But here's the key. Get multiple credit builder loans from different lenders. 3 $500 loans means 3 accounts all reporting perfect payment history every month. Then apply for a retail store card using the shopping cart trick. Add items to your cart at stores like Overstock, Sportsman's Guide, or Victoria's Secret. During checkout, you'll often get a pop-up for their credit card. If it takes you straight to approval without asking for your SSN first, that's a soft pull pre-approval. Easy approval that adds to your account mix. Strategy number 5, the payment history rehabilitation technique. This is about maximizing the 35% of your score that comes from payment history, and it's where most people completely screw up their recovery. Every single payment you make from this point forward needs to be on time or early, no exceptions. But here's what separates amateurs from pros. You're going to manufacture additional positive payment history beyond your normal bills. First, add your rent to your credit report using services like RentTrack, Pay Your Rent, or directly through Experian Boost. If you've been paying $1,000 plus in rent on time for years, that's positive payment history that's been invisible to the credit bureaus. Adding it can boost your score 10 to 40 points instantly. Same with utilities, phone bills, and even Netflix. Experian Boost lets you add all of these, and while it only affects your Experian score, many lenders use Experian for decisions. Next, the kickoff hack. Kickoff offers a $750 line of credit that you can only use in their online store, where everything costs $10 to $20. Buy something small every month, pay it off immediately. It reports as a revolving credit line to all 3 bureaus with perfect payment history and low utilization. It's basically a credit score hack disguised as a shopping account. Here's another payment history secret. Pay twice a month instead of once. Make a payment right before the statement closes to manage utilization, then pay again before the due date. Some scoring models give slight preference to multiple payments per month as it shows active management. Plus, it's impossible to be late when you're paying every 2 weeks. Now let's talk about what could go wrong and how to avoid it. The biggest mistake people make is trying to do everything at once in week 1. The credit bureaus have velocity filters that flag unusual activity. If you suddenly open 5 accounts, add 6 authorized users, and dispute 20 items all in the same week, you might trigger a fraud alert that freezes everything. Spread it out over the first 30 days. Another massive mistake is paying collections without getting pay for delete agreements first. Paying a collection updates the last activity date and can actually drop your score temporarily. Always negotiate deletion before paying anything. If they want delete, let it age off your report. A 5-year-old unpaid collection hurts way less than a newly paid one that just updated. The third fatal error is closing accounts after paying them off. Your available credit drops, utilization goes up, average account age goes down. Keep everything open unless it has an annual fee that doesn't make sense. That store card you never use? Keep it. Use it once a year for something small to keep it active. It's helping your credit mix and available credit. Let me give you real numbers on what this transformation means. With a 580 score, a $25,000 car loan at 18% interest costs you $35,377 over 5 years. With a 740 score, that same loan at 5% costs $26,645. You save $8,732 on one car loan. The average American buys 12 cars in their lifetime. That's $104,784 in extra interest just on cars. Add in credit cards, mortgages, personal loans, and we're talking $500,000 in lifetime interest savings. But it's not just about interest rates. Credit scores affect employment. A Society for Human Resource Management survey found that 47% of employers run credit checks on candidates. That dream job at a bank or financial firm? Not happening with a 580 score. Want a security clearance for government work? Bad credit is one of the top reasons for denial. Even that promotion to management might depend on your credit because companies think financial stress leads to theft or poor decision-making. The rental market is brutal for people with bad credit. In competitive markets, landlords have 20-plus applications for every unit. Guess whose application goes straight to the trash? The 580 score, even if you make 10 times the rent.
You end up settling for worse neighborhoods, sketchy landlords, and overpriced units because you have no options. With the 740, landlords are competing for you as a tenant. You negotiate lower rent, get the deposit waived, and live where you actually want to live. Insurance companies use credit-based insurance scores to set rates. According to a study by insurancequotes.com, drivers with poor credit pay 71% more for car insurance than those with excellent credit. That's an average of $1,500 per year extra. Over 40 years of driving, that's $60,000 burned on insurance because of bad credit. Home insurance is even worse. Poor credit can double your rates. Let's talk about the psychological warfare the credit industry uses against you. They want you to feel ashamed of bad credit like it's a moral failing. Credit card companies spend billions in marketing to associate their products with success and sophistication. Meanwhile, they're hoping you max out the card and pay minimum payments forever. The average American household with credit card debt pays $1,155 annually in interest. That's their business model, your financial stress. The credit repair industry is mostly a scam preying on desperate people. They charge $100 to $200 per month to send the same dispute letters you can send yourself for free. They use scary words like deletion experts and credit specialists, but they're just filling out forms. The Credit Repair Organizations Act prohibits them from charging upfront fees, but many still do. They string you along for months or years collecting fees while your score barely moves. Everything they do, you can do yourself in a few hours per month. Here's a timeline of what to expect realistically. Days 1 to 7, pull your credit reports, identify all issues, make your authorized user requests. Days 8 to 14, dispute errors and collections, apply for secured cards and credit builder loans. Days 15 to 30, get credit limit increases, set up automatic payments, add rent and utility reporting. Days 31 to 60, monitor progress, adjust utilization before reporting dates, potentially see first score improvements of 30 to 60 points. Day 61 to 90, compound effect kicks in with multiple months of perfect payments, disputes resolved, utilization optimized. Total improvement, 100 to 180 points is typical, with some seeing 200 plus. The maintenance phase after hitting 740 is where most people fail. They get the good score, get approved for a bunch of credit, then go crazy and end up worse than before. The habits that got you to 740 need to become permanent. Utilization under 10%, every payment on time, no unnecessary credit applications, regular monitoring for errors. A 740 can easily become 800 plus with time and consistency, or crash to 600 with a few mistakes. Let me tell you about someone who actually did this. Maria, 32, single mom, working retail. Started at 578 after a divorce destroyed her credit. Medical bills and collections, maxed out cards, car repo. She thought she was doomed. Day 1 got added as authorized user on her sister's old Discover card. Day 15 successfully disputed 3 medical collections using HIPAA violation letters. Day 30 got 2 secured cards and started credit builder loans. Day 45, utilization dropped from 95% to 28% using balance transfer to a new card. Day 60, score hit 651. Day 90, score stabilized at 743. She just bought a house with a 6.5% rate instead of the 9% she would have gotten 3 months earlier. That's $287 less per month, $103,000 less over the life of the loan. The generational impact of credit scores is something nobody discusses. Parents with bad credit can't co-sign student loans, forcing kids into predatory private loans. They can't help with car loans, apartments, or business ventures. Bad credit literally handicaps your entire family tree. But flip it around. Parents with excellent credit can help kids establish credit early, co-signing and adding them as authorized users to age the counts. Rich families do this automatically. Poor families don't even know it's possible. Business credit is the next level once you fix personal credit. With a 740 personal score, you can get $50,000 plus in business credit cards with just an EIN and a basic LLC. This credit doesn't show on your personal report, giving you massive available credit for business ventures or investments. Real estate investors use this strategy to fund deals without touching personal credit, but you need that 740 personal score first to qualify. The international perspective shows how arbitrary our system is. In China, they have social credit that tracks your behavior beyond finances. In many European countries, they look at your banking history and income more than credit scores. In Islamic finance countries, the whole concept of interest is different. The American credit scoring system is just one way of doing things, not some universal truth. Understanding this helps you see it as a game to be played, not a judgment of your worth. The technical details of FICO scoring versions matter more than you think. Most lenders use FICO 8, but mortgage lenders use older versions, 2, 4, and 5. Credit cards often use FICO 9 or Vantage Score 3.0. Your score can vary by 50 plus points between versions. This is why you might see 720 on Credit Karma but get denied for a loan. They're using different scoring models. For this 90-day sprint, focus on behaviors that improve all scores: low utilization, perfect payments, and account mix. Let's address the ethics of this because I know some of you are thinking this feels like gaming the system. Here's the truth. The system is already gamed against you. Credit bureaus sell your data to marketers. Banks lobby for laws that benefit them. The entire system is designed to extract maximum profit from people who don't understand the rules. Using legal strategies to improve your score isn't cheating, it's self-defense against a predatory system. The opportunity cost of waiting is massive. Every month you delay starting this process costs you real money. If you're 30 and wait until 35 to fix your credit, you've lost 5 years of compound interest on investments you couldn't make, 5 years of equity in a home you couldn't buy, 5 years of business opportunities you couldn't pursue. The best time to start was 5 years ago. The second best time is today. Here's what separates the people who succeed from those who fail at credit repair: consistency and patience. Your score might drop before it rises as new accounts load.
Here's what separates the people who succeed from those who fail at credit repair: consistency and patience. Your score might drop before it rises as new accounts lower your average age. You might not see movement for 30 days, then suddenly jump 50 points. Some disputes will fail, some creditors won't negotiate, some authorized user requests will be denied. The winners keep going. The losers quit after the first setback. The 90-day deadline isn't arbitrary. It's based on credit reporting cycles. Most negative items take 30 to 45 days to dispute. New accounts take 30 to 60 days to start reporting. Payment history needs 60 to 90 days to show impact. 3 months is the minimum time for all these strategies to compound. Could you stretch it to 6 months and see better results? Sure, but 90 days creates urgency and shows significant enough progress to motivate continued improvement. Your action items for the next 24 hours. First, go to annualcreditreport.com and get all 3 reports. Don't pay for scores, just get the reports. Second, sign up for Credit Karma to track Vantage Score and experience free service for FICO 8. Third, list every negative item and its details. Fourth, identify 3 people who might add you as an authorized user. Fifth, research secured cards and credit builder loans. 6, calculate your exact utilization across all cards. 7th, set calendar reminders for every bill due date plus reporting dates. The mindset shift required is this: stop thinking of credit as something that happens to you and start thinking of it as something you control. Every financial decision either helps or hurts your score. That $50 minimum payment versus $100 affects your score. That store card you're thinking about affects your score. Letting a medical bill go to collections destroys your score. Once you see every financial choice through the lens of credit impact, better decisions become obvious. Remember, the credit bureaus are collecting data on you whether you participate or not. Opting out isn't an option in modern society. You can either be a victim of the system or a master of it. The strategies I've outlined aren't temporary fixes. They're fundamental changes to how you manage credit. Master these and you'll never have credit problems again.